Hello and welcome to another edition of Deal Hunter. I am so excited for our guest today to talk about something other than real estate. Our friend Morgan Polotan from B Capital. Nice to have you.
Nice to be here, Mitch. Thanks for having me.
Yeah, we really appreciate it. Tom, it's always good to see you. It has been a while in person. You've been traveling quite a bit. What have you been up to, my man?
Oh boy. We are just about to launch a major PR campaign. The city of Lockhart, I've been acquiring land down there for some time. We have about 1,000 acres. We got the green light to essentially build a second Lockhart from the mayor. So hospitals.
Congratulations.
Yeah. Well, a lot of work ahead of us, but probably an $8 to $10 billion 12-year legacy project that we'll hang our hat on and say, did it, mom, look at me. And then that's about it. So.
Well, I don't mind the time frame. I think it's definitely a uneasy time in all asset classes. And we wanted to bring Morgan on to really kind of give us an idea of what the venture space looks like. BCAP, they're one of the more successful venture firms out there. Morgan, I'd love to kind of know a little bit about your background, how you ended up at B Capital, and perhaps give us a little idea of perhaps the investment thesis that you guys run with.
Absolutely. So I've been investing in venture for about 7 years. I kind of had a roundabout way of landing here, which is that I was actually a software engineer before going over to the dark side, and got kind of randomly recruited by a firm, Bloomberg Beta, who took a shot on me. And that was a 2-year stint. I found out I really liked it, so I stuck around. After Bloomberg, I went over to Comcast Ventures, where I spent 3 years doing a little bit of everything, so both B2B, B2C, early stage and late stage. And then I joined B Capital in March of last year to help out with our newly announced, about a month ago, early stage fund. It's called the Ascent Fund. It's a $250 million vehicle focused on seed and Series A. And to tell you a little bit about just the firm broadly, so we are pretty new on the scene. We were started in 2015 by 3 co-founders. So Raj Ganguly, who's an executive at Bain, along with Eduardo Saverin, who's the co-founder of Facebook, and Howard Morgan, who's a co-founder of Renaissance Tech and First Round and Idea Lab. And so we were started in partnership with the Boston Consulting Group. So we have an operating partnership with them. We bring them in post-investment to help our portfolio companies grow and scale. And today we manage a little over $6 billion in assets that's split across a family of funds. So we have later stage funds, we have domain specific funds that only invest in healthcare, geo-specific funds that only invest in China. And our newest fund is, as I mentioned, early stage fund.
Thank you for that background. Let me ask you this, primarily, is this a in-house funded are these in-house funded funds? Are you guys managing capital for institutions?
Yeah, institutions. We have a number of LPs, kind of the usual suspects, lots of institutions, family offices, primarily.
So talk to us a little bit about the investment thesis, perhaps, something that you may have learned over at Comcast before you jumped to B Capital, and perhaps maybe how that's different. And, obviously you've been in the VC world, I guess on the shorter time frame, but certainly, I don't know if the venture timeline is like dog years for one year equals 7 real people years. So give us a little idea on the investment thesis of perhaps Comcast and maybe how that differentiates at B Capital.
Yeah, well, we'll start with B Capital. There's a very clear thesis, both at the firm's founding and now, which still is intact, which is, so at 2015, I don't think there were any funds who were investing globally and across a company's life cycle. And so, globally, obviously in every major market, and then by across a company's life cycle, we mean from, seed stage, founding, pitch deck, pre-product, pre-revenue, all the way up to, IPO and exit. So that was a thesis for the fund. It rested on an assumption that, globalization, has been a major impact in the world and will continue. And most of the venture industry is focused very much on the US. And so I think that the three founders saw a gap in the market, and decided to partner with BCG to execute on that, because BCG has offices in 80 plus countries, been a global consulting firm for a very long time, and had a lot of expertise in helping traditionally enterprise companies expand, but wanted to apply that expertise also to emerging enterprise companies. And so that's still the thesis. And so we've just been, laying the building blocks there. And now with our seed and Series A fund, we now have that every stage covered. And I think this year we made our first investment in Africa. So I think we have pretty much every region covered as well, outside of Antarctica. So it took us 7 years to get there, but I think, it's exciting times ahead.
Yeah, Morgan, let me ask you this. Yeah, so just real quick. So are these funds, are these evergreen funds, or do you have windows capping the raise time?
Yeah, it's a traditional LP GP structure with committed capital. And so, our latest growth funds be, north of $1 billion, and we kind of like every venture firm will be, raising subsequent vintages, every.
Yeah, and are you, the other podcast, All In, fantastic podcast, but now that I think firms are pulling back on funding, are you having issues deploying capital fast enough to meet your prospectus, or what's the scoop there?
No, I mean, it's a great question. I love All In. It's part of my favorite podcast. No offense to you guys. Maybe you guys will get there. It's my first exposure here, so let's see.
Well, they don't have the hair like Mitch does, so.
That's true. That's true. Best hair in podcasting. So, the short answer is no, actually. So things definitely did slow down post, the market meltdown, just mainly because, everyone's just trying to make sure their portfolio was in a good place, figure out like what the hell is going on. And so that slowed down deal making. But the fact is that there's a lot of capital that's been raised, and it's been sitting on, is ready to be deployed. And so, we've seen things pick back up, frankly, in the last month. And not to say that it won't tick back down again if something happens in the macro environment that is bearish, but I don't worry that that things will kind of grind to a halt in the private markets. And of course, it definitely differs by stage, right? So if you're a late stage investor aiming for an IPO in 2 years, and then public multiples crashed by 70%, like that impacts you more than if you're where we are at the Ascent Fund, investing in seed Series A companies, where we don't think they're going to exit for 7 to 9 years.
Yep.
So Morgan, one of the things I'm very interested in, so I am part of a very small venture fund called The Fund, which is an offshoot of Techstars. And, we've got a small $1.5 million fund where we do micro investments. We literally write $50,000 checks. It's probably more about the ecosystem. And we've obviously got some prominent LPs here in the Central Texas region that help facilitate, foster these companies to get to that next stage, perhaps a Series A. One of the things, that I'm curious about, we're $1.5 million. We write $50,000 checks. You can do the math. It takes 30 portfolio companies to have an interest, which takes time. We've been around for, I think, 6-7 months now. With this latest fund here in Austin, and we've only deployed, I believe, 6 or 7 checks. So how do you put that $250 million to work? I'm very curious about that.
It's a great question. I mean, to be honest, I think maybe we've had the privilege of having the opposite challenge, which is how do we make sure we deploy over our entire investable period and not pace too hot. And that's, because I think we do see a lot of great founders and opportunities coming our way. And so, I'd say for most of my investment career, for that matter, it's always been the opposite challenge, which is to make sure the capital lasts as long as it should. But, look, it's a different, a bit of a different beast in terms of like Bloomberg and Comcast having brand names, and, B Capital been around for many years. And, we have 35 plus investment professionals, all who have, many years of experience and relationships and network where most of those deals come from. And so, I think it's, for new funds and for a smaller one, it will take some time. But I think, the kind of rule of thumb or like rough stats looking back when we've done this analysis is, we might invest in 1% of deals that we see at the end of the day. And so, we probably look at, 1,000 deals a year. So most of it is about, I think, picking and then, winning the ones that you pick.
I'm fascinated by that because I feel like I get pitched twice a day and I might see 50 to 100. So it must be nice to fully dive in. When founders approach you, I mean, I assume you guys with the Ascent Fund specifically, do you provide an ecosystem to kind of nurture and foster these portfolio companies? How do you guys invest? Is this a strategic investment, or are you guys more passive where you just find the right founders who just have it already? Perhaps they've already graduated from some accelerator program and they're ready to go, and you guys are coming in alongside of some of the other venture funds out there?
We like to be pretty hands-on and active. And so, we prefer lead or co-lead rounds, which typically means we'll take a board seat and be pretty involved in the company. We have an amazing platform team at B Capital that helps with, everything from, hiring and marketing and sales and PR, budgeting, capital formation. Like, we have a really great team. So in addition to the investment team being involved at the board level, we have the platform team to help. And then externally, as I mentioned, around the partnership with BCG, we bring folks in there as well. And that can be, anything from a 30-minute call with a domain expert to, especially for our larger portfolio companies, like more full-fledged engagements on strategic issues. So we do consider ourselves very active investors. I would classify us as active financial investors, given that, our job is to get ROI for our LPs as opposed to, strategic benefit for, a corporation. But yeah, we do kind of roll up our sleeves as much as we can. And so we'll have like a more consolidated portfolio relative to a more passive investor. There are different models, nothing, not right or wrong, but just, affects your strategy.
So you guys are taking pretty big bets. And that was kind of my next question. How many companies are you going to actually seed with $250 million? I'm just curious to, what the attribution of one company and perhaps maybe what the success looks like or what you hope to look for in a company. They're typically referred to, a 20 bagger in the VC world. And you obviously have that one uni or decacorn that perhaps picks up, a lot of the, ones that perhaps don't reach those crazy milestones, but perhaps still significant businesses.
Yeah. So we're looking to do probably 30, 35 companies in this fund, maybe 2/3 A, 2/3 seed, 1/3 A. In terms, it's still too early to know kind of how the distribution of returns will play out. But as you guys know, VC is very much like a grand slam business. And so power law is very much in effect. Well, if we're successful, we'll probably have, one or two companies provide most of the returns. That's generally how it works out. And then, hopefully we have, another 40% or so, 50% that have kind of good returns. And, we expect to have obviously losses as well. And so kind of the rule of thumb that I've always thought of is, a third losses, a third, 1 to 3x, and, a third 5 to 10, maybe 1 or 2 really explosive ones that make the fund to make up for those losses.
That's perfect. That's great insight.